Hello, hello, hello. How is everyone doing today? All right, so I wanted to just shoot this video very quickly as a normal video, but the live stream platform is a lot easier for me. I don't have to do any editing and rendering. So we're just going to go ahead and get straight to business. Now, first things first, I do want to respond to a couple of these. I don't know why. I think he deleted his comment. Yes, this guy spams to promote. I got a couple comment here. How much is Citadel paying you for this, crap? Honestly, there's a lot of unfortunate negativity surrounding a cult stock when you try to critique it. And in this video, I'm going to show you guys some experienced data. I've been in the market for 10 years and I've been teaching for 15 years. And I'm going to show you guys some stuff that unfortunately no one's talking about. And people are just wanting to get views on AMC, because if you are a avid supporter of AMC, you'll get views. And essentially, you're making money off of the suffering of people. And in this channel, we like to bring you guys the best data. Hey, Josh, do you mind if you tell me, can you hear me? Nervous about this. Oh boy. Yeah. Yeah. Al Stock Trades is hitting up a big retail darling here. But again, you guys come here because I give you guys I give you guys the truth. I give you guys from what I understand is the truth. Now, I will have to preface this. This stock is manipulated. This is manipulated. There it is, but it's gotten to a point now where the people that we're in war with have gotten smarter, right? And they're able to play intricate games within the system they designed. Okay, so let me explain to you something. It takes 10,000 hours to master something. I put in approximately over 84,000 hours in the stock market. Okay, so I guess I've mastered it 8 to 9 times over. Okay. I'm nothing compared to these hedge funds. These hedge funds have created the system back in early 2000s. Citadel created this. They created the interest. They know how the market works. Okay. And by understanding how the market works, you can create other rules that unfortunately we don't know about. Right. And then it takes us 10, 20 years to figure it out. Okay. Oh, thank you so much, Frank. I appreciate that. Thank you. I appreciate that. Hey, listen, I always try to provide you guys the best information possible. And, again, I received a lot of hate on this. I posted it on the Reddit boards like how I do for Clover Health. And I got middle fingers. I got so much negativity. Okay. Do you think Al, do you think it will squeeze at least? So we're going to go with the data and we're going to go in, but understand that there's going to be a share dilution. And in fact, I'm going to be pulling up Trade's video. I'm not going to be playing it. I'm just going to look at the comment sections just to share with you guys, the 90% of retail owners, what they're thinking, right? In a sense, right? Which is not a sophisticated method of analysis, but just to give you some perspectives, right? So first things first, let's go ahead and talk about the revenue here. So in the most recent revenue streams, they've gotten about, again, these numbers are in millions. They got $2.5 billion. Unfortunately, their cost of the revenue is $2.6 billion, okay? Their gross profit's negative, their other expenses are negative, and their earnings are negative, okay? The parenthesis points in accounting principles means a negative, and obviously I put it in red for easy navigation. Okay, so now let's go ahead and let's take a look at the key fundamentals here, okay? So you have a stock here, trade with a revenue, as I said, of $2.5 billion, trading at a market cap of $7.3 billion. Okay. So it's all obviously trading at 2 to 3 times price to sales. Okay. Or actually right here, where the price to sales ratio 2.9x. Okay. Again, PE ratio, again, since this is not a growth company, what this basically means, every dollar that you spend for AMC, you're going to lose essentially, I would say $5, right? So it's a negative investment, okay? It is not it is not in your best interest to go ahead and do that. And in fact, retract what I stated in that statement. You're going to lose a lot of money if you invest in this in the long term. This is not a long-term play, okay? This is more for people who want to get in and get out. And essentially, you are battling now the retail investors, right? Other retail investors. And the goal now has shifted from the whole short squeeze to trying to pump up the stock as much as you can so you can basically sell it to someone else, okay, at a higher price, which is not investing. That's called speculating. So there's two differences here. You have investors and you have speculators, which is chapter 1 of The Intelligent Investor by Benjamin Graham, which will be sub-included within our Intelligent Investor course for the people that purchase the bundle on our Mastering Stock Market course, okay? And what that basically says is that you're going to have people that are going to go through cults. This is like if it was legal to kill someone that did not support AMC, there will be some AMC folks out there that would kill for this is how crazy a cult-like mentality can happen. Okay? Okay, so we're going to go ahead and we're going to go further into this, and I want to provide you something, and this is an important listen. If you don't take anything away from this, I want you to just take away this graph here, okay? There's a lot more stuff, but this is this is one of the main ones, okay? So right now, Trey Trades, he has 300,000 followers over that on YouTube, okay? He specifically stated AMC has enough money to pay off their debts. Okay, that's true. But look at how much money will be left over if they do that. Alexa, 1.87 billion minus 1.79 billion.
1,870,000,000 minus 1,790,000,000 equals 80 million.
They'll only have $80 million, and they're losing per quarter $60 million. If you go ahead and subtract revenue minus the operational expenses, which I will show you, do you think a company with $80 million in cash, if they pay off their short-term debt, will be trading at a market cap of $7 billion? I don't think so. Think about that. Think about that. There is no other option other than to offer shares. There is no other option other than to do a share dilution. They need to pay off their debt, and just look at their long-term debts. They don't even have enough money to pay off their long-term debts, guys. Their long-term assets can't even if they want to sell their movie theaters, can't even pay off their long-term debt. But all these AMC folks, they're not looking at this. Oh, this doesn't matter. Well, if you don't have a business, of course it matters. You won't be traded on the S&P 500. Okay, so I'm going to take a sip of coffee here. Okay, so this is an important factor because Trade says I love the guy's passion, but I have to take a stand. Let them pay off their short-term debts. Go ahead. They have cash. Okay, well, where are they going to get the other cash then? I'm going to do a President Biden. They have to raise shares. They have to raise shares. You know how he whispers in the mic? Okay. They have to raise shares. Okay. And if you look at the holders of AMC, a lot of them are like, if they do that, I'm walking away from a $20,000 loss. If they do that, I'm going to start shorting the stock. You're going to start seeing some division within the AMC holders, and it's all going to crumble. Okay. So let's go ahead and answer some quick questions here as we move on. How in the heck did AMC not come out with tons of money when they had their short squeezes? Well, that's the thing. I'm sure that's how they generated this cash. I'll be showing you a graph. They've been doing share offerings, and it's funny, if you look at the insiders, they're selling shares. Of course they are, and retail is getting screwed over. They're buying. And all these pumpers on YouTube that are making money on the ad revenue on the back end are basically pumping how to get rich quick while they're making a steady form of income through YouTube ad revenue, which pays a significant amount through a CPM rate because you're talking about finance. Because, other advertisers would pay more money because you guys have the money to shell out to buy a stock. You guys have money to shell out to buy advertisements. And that's how they make their money, right? So it's definitely a dirty game. And I'm going to sit down here and show you guys the real truth here, okay? Now, again, this stock is shorted. I think short interest around 20%. The retail owns 90%. There is some manipulation, but you got to see the other half of the story. You can't just ignore the bad. Okay, so let's look at the price to sales ratio, and as you can see here, it's scooped up really high with the squeeze here, especially with Clover Health, and then it started to bleed down, and now we're getting back to baseline here. Okay, and we'll see exactly. I'm going to give you my intrinsic value calculation at the end of the video here. I'm going to give you we're going to calculate it, and I'm going to show you guys where the oscillatory price is going to be. Okay, so now if you look at the calls and put ratio, and again, for people that have, a lot of you guys know exactly how this looks like, because some of you guys that are in this chat are in our Patreon group that has access to our artificial intelligent technology. All you have to do is type in any ticker symbol, and then our artificial intelligent technology will return you this data specifically for AMC. And as you can see, there are more puts than there are calls. And essentially what that means is the sentiment for AMC has turned bearish. And if you look at the biggest flow, you could see that it's hovering around a strike price at around $15, right? But you can see all the puts that have been placed here. So it's definitely heavily hit around this particular region here by looking at the particular volumes that we're getting here, okay? So hopefully that makes sense. So I'm going to pause a little bit so you guys can see this really quickly. So as you can see, there's a lot of puts on it, and it's heavily being bounded at the $15 region. And if you can see here, guys, it's been trading around this. You see how it's been back and forth here? And now it's kind of bouncing on this $15 region. Okay. So let's go back. Okay. So then now, dark pool levels. Now, I will have to say, this is a little bit unusual. Again, this is an unusual stock that we have. The dark pool data suggests that people in the underground have been essentially purchasing at these different share prices, okay? With the maximum hovering around the $18 region and also at the $15.69 region. But later in our intrinsic value calculation, this will make sense. Again, we're going to be using technical analysis, artificial intelligent analysis, fundamental analysis, and sentimental analysis. These are multiple analyses now. And now for the artificial intelligence, what the AI is predicting here, it's saying that intraday, this is a terrible investment, but however, through a swing trade combined, we might actually see a bullish inflow, okay, which will fall in line with our fundamental analysis. All right, let's see if let's answer some questions here really quickly here. Al, do you think it will squeeze out? Okay. Oh yeah. Sorry. I already went through that. So you think puts will pay off in the short term? Well, that's the thing. It's very difficult. It's extremely difficult to say that, because the fundamental analysis, once we go into it, you'll see that the intrinsic value on a very green, bullish, sunny day, which means I'm going to be not conservative with my calculation, suggests otherwise that it's trading possibly at fair value. Okay, so we'll answer that question at the end after all of our analysis. Okay, but that's what I'm saying. That's what it takes, right? This is a quick analysis. This is not even my in-depth analysis. Okay, so from the artificial perspective, it seems like a good swing trade. Okay, now let's look at the algo flow. From what the algo flow is saying, and this is from a 5-day perspective, you can see that the algo score is actually negative for AMC. Okay, and the stock price is going down, which means that option traders, like what we basically stated with all the puts that have been on the AMC stock, it's been going down. Okay, and if you look at the let me see here. Yes, on the 1-day chart, the algo score swooped even down more, which signifies that there is more room to go down. Okay, that's from the algo score perspective. Now let's go back to the fundamentals. Now again, 2020 was an unusual year. The pandemic happened, and then movie theaters had to slow down and close down. And all of a sudden here, we got almost zero revenue. The CEO was begging the government for money and saying that they're going to have to lay off these people, and most likely they're going to go bankrupt. Coffee break? So essentially, if you look at the revenue here, it's been increasing in a stepwise fashion. This is great. I like to see that, right? But yet again, though, it's approaching its mean value here. It's approaching its mean from quarter to quarter before the shutdown happened. And once it gets to that level, well, then that's it, guys. I mean, unless they drastically change their business model to subscription services, which is already very hard to do because of Disney Plus, Amazon, Apple. There's a lot of content creators now, Netflix, that, this is a tough market to crack. Okay, now look at the operating expenses here. Okay, the operating well, first off, again, this was the revenue. We're hovering at this was a 1.17, I believe, for the most recent quarter. Look at the operating expenses. It's hovering at a 1.23, I believe, billion. Look at this. They're losing money right now. They're not profitable. And their operational expenses will approach their baseline. It only means that they're going to be burning more cash. Net income, it seems pretty good. it possibly will get to net income positive, but let's analyze this for a sec. This is the AMC for over 10 years. Listen, guys, management is management, okay? And you cannot remove the gutter from management. If management is a terrible, then it's going to be run terrible, okay? Yes, they're trying to alter it. They're trying to give little gems and nickels for their retail AMC investment community by doing these NFTs. But you have to understand something here, guys. Look at the history of AMC. Let's look at this. The revenue hasn't even gone over $5.4 billion. And we're going to be using that number for our altered free cash flow assessment. So I'm going to be giving them the benefit of the doubt. I'm going to say, you know what? They're going to get to their highest peaking revenue they've ever created, and we're going to assume that they're going to be free cash flow positive. And then I'll give you my price target, okay? So if you look at the free cash flow here, look at this. This is abysmal. -2 from 2012, 97, 27, 134, 10, -68, 53, 49, -1,300. And again, that's 2020, but they're still in negative. Now, if people don't understand what free cash flow is, and I understand that a lot of these YouTubers don't talk about these things. They've been in the market not too long. I've been in the market for 10 years, and I want to explain to you guys, these are the numbers that drive the business. Without a business, you won't be on the stock market. Okay? So, just like anything in life, there is a yin and yang, right? Let's say the bad part of the stock market is the citadel, but you have to understand within that section, there is a bit of the good, right? And that good is, there is some truth to this. This business is not run as great. Now, again, for the AMC side, the good, let's say, the holders, right? Within that, there is some bad, which is, again, all the negativity that we've been getting, all the bad things that, not being able to express your ideas and the facts without getting essentially hung on a cross. Oh my God, right? So and just look at the shares. Look at the shares: 98, 99, 128, 130, 104. They did some share repurchase. 117, 477 million. They've increased the amount of shares, and they're only going to go more. So let's go back and let's go ahead and answer some quick questions here. So yes, I would have to go in and unfortunately, yes. So most likely they probably are all the same. I need to get into the specifics for each one. I always like to have the data. Excuse me. I always like to have the data before commenting on other stocks, but that's the thing. Because it keeps me objective and scientific. But as you can see here, the net income here, if you look at their net income, that's what I wanted to show you. Look at this. It's not impressive. Management sucks. Okay? All right, let's go. And even Trade said they don't agree with management. Well, we'll look at their history before you invest in a company. Okay? Now look at this. Revenue and operating income. Look at the revenue here, guys. The revenue has been going in a stepwise fashion, but listen, it's approaching the mean from before. Okay? Well, so I'm going to go, okay. And then if the operating income is slowly creeping back up. So wouldn't Adam Aron know that retail will pull out if he further dilutes? Well, that's probably one of the reasons why their balance sheet looks atrocious. They're trying to find other ways possibly. And Trades mentioned one thing, offering an NFT that could be something of value in the future. By charging $50 to $100, people can just buy when they watch a movie. But let's face it, guys, right now, with inflation going through the roof, with gas prices going up, do you really think people can afford that? And even then, is that a viable business model? No, I don't think it is, right? The market's not going to go for that, all right? Maybe you might have some avid supporters, but just like anything, it'll creep back up and go back down, okay? So then there's that. And then also, it's just... There's a lot more bad right now than there is good. The market's changing. Interest rates are going up. Jerome Powell's going to raise interest rates. All that debt that they have is not going to look good. Now, regardless, even if Aaron knows that retail will pull out, they don't care. They just saved the company. That's it. The stock price will be depressed. Puts will essentially increase in value, and then Big institutions will buy back in at a lower price, drive the price back to its intrinsic value, which I will show you at the end of the video. And unfortunately, who cares? Right? That's business. That's the cost of doing business. Okay. All right. So that's the sad part that's Wall Street. All right. So now let's look at the outstanding shares. They've been hovering around this for quite some time, and then boom, they just increased, taking advantage. Because think about this. The more they dilute shares, guys, I'll show you my intrinsic value calculator, the lower the price target's going to go, because again, just like look what happened to Clover Health. The only time when you should dilute shares is when you are a growth company, when you're growing. Clover Health is going into Florida and Georgia and all these other New Jersey. They've already been in there. They're going into all these markets, guys. Arizona, hopefully going to the Maricopa County. They're already in Pima. They're growing. What is AMC going to do? How are they going to grow? Right? So they're trying to pay off debt. And if you look at the growth right now in terms of revenue, they went back to the mean. And then now they're falling back down in terms of their revenue year over year growth. This was abnormal because the past year in 2020, when the pandemic happened, they swooped down. And then all of a sudden they went back up because they're approaching the mean. And now they're going back down. Right? So that's why we've seen that quick short squeeze happen. It's because they were reopening. Now let's take a look at the technical analysis perspective. So let's go ahead and look at TA. So as of right now, at the current level, AMC is trading at $14.30 with an after hours price of $14.24. Okay, guys? So as you can see here, it's hovering around this support line. It broke it in a minor way, but this is a support line. The next level of resistance is $15.66, which you see it tried to go up, test it, and failed. And this is using our AI, artificial intelligence technology. If you want access to this, there'll be a link down below in our Patreon group that you can have access to. And I'll link it up here so you guys can do it under $10 a month to have access to all of this. Again, I want to provide you guys the best information possible. All right, so let's go ahead, and this is the minute chart. Let's go ahead and look at the hour chart. Same thing. It went ahead and broke the $16 support, and now it's trending down. So you might be asking me, what is the next level of support? Hey, Luis, it is a privilege and honor. Okay, so then let's go ahead here. Let's look at the support and resistance level on the day chart. Again, it's hovering in the $15.21 region. If it breaks this support, which it already did, things are not looking good. So now let's look at the last one. Let's look at the week chart. By looking at the week chart, it just literally broke the $15.06 region. The next level of support is going to be the $9.33 region. And again, if you guys have had access to this technology, you would have known that the $50 was a line of resistance. It went back up. Since it failed, you would have basically seen, okay, $40 was the resistance. Then it squipped that back up, hit the other resistant line here, hit the support and failed, hit the support and failed. And guess what? It's going to continue to go down low. And we're going to see right now, it's probably going to hit $9.33. Mark my words. Okay. In terms of Clover Health, I need to take a look at the, I believe we talked about this in our longer live stream. Have you seen it? It's an hour and 30 minutes long. And I believe I said it there, but I will mention it again in our subsequent videos in the future for Clover Health. But this one's for AMC here. I appreciate that, man. I really do. I try to provide you guys information that's non-biased. I don't care if people dislike this video. Again, I'm going to be a physician. I'm going to become a brain surgeon. This is not my career. I'm here to help you guys. Okay. That's all I'm here for. Okay. So, all right. So I'm not a YouTuber by career choice. I am an academic going into becoming a physician to help patients. That's my primary goal. This is just a side hobby, side passion. I want to help retail. Okay. So let's go in and take a look at the shares sold. Guys, insiders are selling shares. I mean, come on. I mean, they're selling them to you, retail, and retail's buying them. I mean, come on, guys. Come on. Okay? Look at this. There's nothing significant here. No institutional people want to touch this stock. No one's touching this stock. In fact, here, this particular capital management company, they still have puts, but they decreased their puts by 54%. But they still have puts on it. They still think it's going to go down more. So then this is basically what we have here. Now let's go in and do our intrinsic value calculator. Again, if you want access to this intrinsic value calculator, you'll be able to find it in our Mastering the Stock Market course in the link down below. So we're going to go ahead and I'm going to show you guys what numbers we're going to be using. But first, let me go ahead and give you guys the link. For people that have not registered, I recommend you do so. It is $9.99 every month, and you get access to $22,000 of yearly information. I do this to help and provide. You don't like it, you can cancel at any time. All right, there it is. Check it out. Now, let's go back here. This is our intrinsic value calculator. What we're going to be doing now is we're going to be using the numbers that AMC offered. All right, guys. AMC, I'm going to be using a free cash flow of, assuming, because right now they're making around $2.5 billion. Okay, they're making $2.5 billion. I'm going to assume that they are going to be making their maximum $5 billion. Okay, I'm gonna use this number. Okay, and then I'm going to see when they were free cash flow last time, and I'm going to take their highest past free cash flow. Okay, right there. Okay, so automatically 2015 was a good, pretty good year, I want to say, and all of a sudden after 2015, things started to go down. So let's look at the stock price from 2015 and on. Let's see what happened. See, 2015 was a good year, and then after that, look what happened. You see, by just looking at the fundamentals, look at that. See that? So you by understanding the fundamentals, it's an extremely powerful tool to understand. So now let's go ahead and take a look at the calculation here. So first things first, we're gonna give you guys the revenue, which is 5,471. That was their largest revenue. Okay, and we're gonna go ahead and we're going to see the ratio between the revenue and the free cash flow. So let's do this. Alexa, 2,947 times 8%.
2,947 times 8% is 235.76.
235. See, it's still, Alexa, 2,947 times 6%.
2,947 times 6% is 176.82.
Alexa, 2,947 times 5%.
2,947 times 5% is 147.35.
Yeah, 147. So 5%. So I'm going to give them the benefit of the doubt. I'm going to go ahead and I'm going to give them 8%. Okay. And that's being extremely generous. Yeah. So we're going to give them a, you see that's the thing. That would honestly be a lie. We would have to just give them the 5%. And again, this is me being generous for this company. So 273 for their free cash flow. And I'm estimating that at its highest, they've never even earned a free cash flow of $200. They've never done that. Look at this. They've never earned a free cash flow of $200. This is terrible, okay? But it's okay. We're going to give it to them. We're going to show you guys the intrinsic value if they were to fix their act. So back in, let's go ahead and do 2020. They went ahead and they made $1.24 billion. We're going to assume in 2024, based off of intrinsic value calculations in terms of the analysts and all the estimates that they've created, they're going to end up making $5 billion by 2024. By doing that, it's going to give them a 42% growth rate. However, this is only 4 years from, we're testing a 4-year test spot, which means we have to alter this to 4. And again, the amount of shares they have now is $477. Now look at this. If you do this, 477, look at the price. That's the price target for AMC. Here's your bull, your base, and your bear. And look at that. You see how it's falling to its intrinsic value? That's the intrinsic value. Now, hold on. Let's go ahead and let's use the shares that they had before the dilution, right? This is one thing I agree with trades. Dilution is actually bad for the long term. Let's go ahead and use the number again, 117. You see how the price went up to $100 for the bull, $74 for the base, and $58 for the bear case. And let's go ahead and take a look at the 52-week high, $72. It was right near our base case. And again, this calculator, I created it. It's extremely accurate. If you guys want access to it, it's on our Mastering Stock Market course, link down below. But the problem is they don't have 117 shares anymore. They don't have those. They have 477 because management, dumb management, had to dilute because they went ahead and accrued more debt, which is why their price targets here have been oscillating literally from 14 to 24 bucks, 25 bucks. You can see this has been the oscillation. Okay? And if you actually look at this intrinsic value calculation here, and let's just say we'll give them the benefit of the doubt. Remember how I told you? Let's do 8%, 437. Let's give them a free cash flow of 437, which is that's like being Mother Teresa. That's being very generous. You can see now it rose up to 22 to 39. And if you look at the history of the AMC stock, before that, that's exactly what it was trading around. 22 to 39. Look at that. See? Hitting around near 22 and hitting a max peak near the 40. This is what it was trading at until things became worse for it. But that's being extremely generous. So this is what I stand by. I hope this was helpful. This is my price target for AMC. So you can go ahead and purchase it. And in the future, if they fix their act, it'll get to this. So you'll maybe double your money. The chance of a squeeze possibly might happen. But honestly, guys, PayPal is looking pretty good. TDoc is looking pretty good. Clover Health is looking pretty good. I mean, there's a lot of opportunity here in the market, guys. But people are disenfranchised from reality. They don't want to hear other people's opinions and based off of numbers. This is not some, I'm waving my hands here. I'm giving you guys data directly from the company. I'm not being paid to make this video. I'm just trying to help. Okay. So let's go ahead. If you guys have any questions, go ahead. And then we're going to close off this live. Do you think they will venture into another area like GameStop did? I mean, it depends. I don't know. Management has to say it. I mean, possibly at this point we're just speculating. I honestly don't know. I wish I knew. Do I want retail to lose? Hell no. No, I want them to win. I want them to kill these shorts. But it's terrible. Can you check other stocks like Sin? So yeah. So I'm gonna go ahead and go into our private Discord here. I'm gonna log into our tester. Give us a moment here. They're going into the popcorn business now. I mean, maybe. Are you? I don't know. Are you joking or is that serious? Like, are they actually going to start selling popcorn? Possibly. That's a business. I mean, come on, guys. It's very tough. This is a very tough business, guys. Innovation is where things at. If you guys want to make money, it's innovation. Okay, so let's go ahead. So this is our Al stock alerts. If you guys want access to this, you guys will be able to get a lot of data here. You get our bullseye, which people are making a killing here. Our AI basically tells you what call, what strike, what price. If you look at the bullseye report here, it's telling you it's a put. So our AI is telling you maybe you should be careful. Okay, so we've been getting a lot of people with a lot of our members are getting profits, and they're killing it. I mean, they're hitting them 400% returns constantly here. So if you guys want access to this, definitely link. There'll be a link down below, and also I started a link for our Patreon here. But what I was going to do is I was going to add your ticker right here for the ticker requests. So we'll just go ahead and just add it here, really. And we'll take a look at it for sure. But yeah, and then we just publish it here within our private Discord channel. All right, yeah, so I hope this was helpful. Monday money. Let's see here. It's been announced. Oh, it's been announced? Okay. Well, okay, yeah. I mean, what is that honestly gonna do? I mean, how much money is that gonna rake in terms of their popcorn business? What you have to ask yourself, what is the operational expenses subtracted from the actual profit of their business? I mean, how much does a popcorn business make? I mean, I need to see, again, you know, I analyze what they give me, and this is exactly what they're giving me here. Okay, if this popcorn business changes the actual fundamentals of the company, possibly. Well, when do you think they'll be able to increase their revenues higher than the 5 billion? When do you think they'll be able to kill this? Because right now they're sitting at $2.5 billion. So again, I like your enthusiasm, but they need to, essentially, in order for AMC to go higher, they need to make more than $5 billion. So maybe they can, I don't know. But right now, this is the numbers. They're at here, and this is the numbers. Now, let me ask you a question. Let me fire back one at you here. Okay? Do you think their popcorn business is going to be able to, and 80% mark, you know, do you think their popcorn business is going to tackle their short-term problem, which is to pay off this debt? Here, let's do something. So look at this for a sec, right? I don't know, right? It's tough, but I do want to show you something here. So let's go to YouTube here. Okay. And let's go to trades. Because he's the one, I would say, the one that is the guy for AMC. Okay. I'm not a fan of this. Okay. So in this video, he talked about how he's not a fan of the AMC stock. And for everyone interested, this is a St. George University School of Medicine. Really cool. I'm a medical student, so I know I have some friends there. Okay, cool. So I guess that's a double ad. All right. So if you guys look at the comments here, my firm in that I agree AMC should definitely not dilute further. Okay. How? They need to. How? They'll go bankrupt. I'm with you. No to dilution. They can use the war chest we built for them. Okay. NFTs, possibly. But how's that going to pay? How's that? This is a short-term problem they have, guys. They need to pay this down now. And if they use all their cash, you know, trade says, trade says, okay, yeah, I have enough cash, right? AMC has enough cash to pay down their short-term liabilities, but then guess what? If they use all their cash, they're only going to have $80 million left. So, okay, let's go ahead. Here it is. If Adam Aaron does this, I'll walk away with a effing 20,000 loss. F that. The stock has probably already been diluted tenfold. He's right. It has been diluted tenfold, and I just showed you guys the data, right? But this will be the sentiment that AMC investors will have. They'll just give up and they'll just sell. Some of them will buy it more, but essentially you'll get a loss of conviction. Okay. Then you have other people in here. I saw one that was kind of hilarious. Let me see if I can find it. I can't find it here. Oh, here it is. There, I found it. Mr. Bark Eater. They dilute, we all sell and start shorting it. So now you're gonna get apes going against the grain, and I'm on board with this idea. You know, and someone said should have shorted it when it hit 70 last summer. Anywho, you start to see they're gonna have to dilute, and I don't know if their popcorn business is gonna save them in the short term. Maybe in the long term, but in the short term, it's not looking pretty good. Let's answer more questions. What about of shares are owned by what? So what about them? What about of shares are owned by retail for AMC? I mean, they can continue to just hold. Think about this, okay? Let's say I have this water bottle, and this water bottle is a share of Apple. If Apple dilutes more and makes more water bottles like this, my value of this water bottle is going to go down, right? That's exactly what a share dilution is. The value of what you hold goes down. Now, it's acceptable, like what Clover Health did, if they're increasing by 150 freaking %, then of course, that means the more they grow, the more customers they would acquire, which means the value would grow higher than if they were to stay stagnant. But this is a movie theater chain, guys. I mean, how much can it possibly grow? I mean, what innovation can AMC do? AMC would have to go into like something completely different, like an AI something with tech in order to get those insane high profit margins. I don't know what it is. But at these numbers right now, guys, it's not looking pretty. And no one's talking about this. I'm sure these AMC folks, Trade Trades just mentioned the 1.87 billion. He didn't go into their debt. They got a lot of, I mean, maybe he did in past videos, but there's a lot of debt. I mean, holy crap, right? Okay, they can go into the metaverse, right? And this is exactly what Benjamin Graham was talking about in chapter 1 of The Intelligent Investor, which Benjamin Graham was the instructor of Warren Buffett. He specifically stated that there are going to be these words, AMC, metaverse, blockchain. It needs to bring money. They can go into that, but it needs to be profitable. Right now, look what happened to Facebook. Not even Facebook is making money because going in the metaverse is expensive. Facebook's profit margins are extremely amazing. But as soon as they hit metaverse, they realized that their profit margins started decreasing because metaverse is expensive. Based off of the debt right now, if AMC goes into the metaverse right now, it's going to cost them more money, which then it's going to make them dilute more. Because you have to grow, you have to dilute in order to grow. And if you have apes that are going to walk away from a $20,000 loss, what does that tell you? Again, I'm trying to give you guys a contrarian point of perspective. This is either, I'm just trying to give you guys, there's a lot of YouTubers out there that are just pumping up this stock that are just wanting to get views. I don't care about that. I just care about giving you guys solid information that is backed by data, right? If retail sells all their shares, what would it do to the share price? Well, it would go down. The share price would go down because everyone would want to get out, right? Unless other investors start buying back in and holding how much can retail hold? It's going to go back down. This is what I think is going to happen, and I could be wrong, but let's go ahead and let's do 2 scenarios, okay? There's more, but let's make it simple. Scenario 1 is that retail, they do a share dilution, let's say, and then retail investors lose hope. They sell, the stock price goes down. Guess who's going to buy? Institutional investors. Institutional investors are going to buy knowing that retail loves this stock. They're going to artificially do a short squeeze, then bring it back up high. Then they're going to sell, let retail hold the bag, and the cycle continues, okay? Only a small amount of people making money, okay? There's that scenario. The second scenario is, okay, it's short squeezes. Okay, at what price? Obviously, if they do a share dilution, it's going to hurt it in the long term. The short squeeze price is going to go down, but at what price? I'm hearing numbers, $2,000, $60,000. What the hell? That's crazy. That's more than the GDP of the entire world. Okay? Are you kidding me? What are you smoking? Okay? So that's essentially what my thoughts are. Now, what are my thoughts on energy stocks right now? So here's the thing, my friend. Let's go to Al Stock Trades. In terms of energy stocks, And by the way, I'm upgrading my computer, so it's going to be a lot faster. So you guys are going to love that. It's going to be really good. I'm trying to give you guys the best. So if you look back in literally in November. Oh, and then Trades was like, how do these insiders, these senators know about they bought oil and gas? Well, it was very clear that we were going to go into war. It was very clear that oil, gas prices are going to increase if you look at the historical trend backdated since 1900. And again, I hate to attack Trades into this, but he's the one that's the kind of the AMC guy here. But yeah, I made a video about energy stocks, and guess what happened? The stock doubled. You see, my ads are really interesting. Okay, invest. That's really interesting. Okay, I always watch my ads. They're really interesting. Okay, look at this. Purchased at $46.50 and still holding. And look at this guy. You are double today. Boom. So in terms of energy stocks, yeah, I think that ship has sailed. I think energy stocks are going to probably go down maybe. And but there's other stocks I have in our private Discord channel, in our price targets here, that I've analyzed personally, that are undervalued, that no one's really talking about yet. So yeah, I have them here somewhere. But yeah, so these are all the stocks that I've analyzed here, and so yeah, there's that. So unfortunately, by the time you know about it, it's too late. So you gotta think and buy when no one's buying, like Clover Health, like a PayPal, right? And dollar cost average, right? So that's how the stock market works. Okay, so yeah, no, I'm good with that too. But right now, I hope it reaches that. It's just then you're going to be in the battle between retail versus retail. You see, and don't worry, there'll be a line of apes of unfortunate unsophistication, unfortunately, that are going to buy that high, thinking it's going to go to 200-300 because of GME. But you have to understand, the whole market was going up because of the free money that Jerome Powell was printing. Well, that printer stopped, so good luck, right? So other than that, it is a privilege and honor to serve each and every one of you. I hope this video was educational. I hope it was helpful. We have just 2 more days until you guys can get 5 free stocks from Webull. 5 by just depositing a penny. There'll be a link down below for Webull. It ends March 15, and then they're taking away the 5 stocks. I think they're going to bring them down to 3, but you can win up to $9,000. I think higher, like $9,500. So definitely, if you haven't taken advantage of that, make sure you deposit the penny though, so you can get the other 3 stocks equaling 5. Right. So I hope that was helpful. Don't forget to check out our Patreon link down below. Our Mastering Stock Market course. I put in a lot of value into this, as you guys can see. No one's talking about this. But yes, okay. All right, let's see. It's tough. It's tough. I need to look at the data. GME is going into e-commerce, so possibly it might be really good. It can distribute games worldwide. I don't know. I need to take a look at the numbers. It's all about the numbers. So I can't make those statements. I always try to give you guys the best, and I try to remain scientific as possible. So when I don't know, I say it. I need to look into it. With inflation and Ukraine deal going on, you think, well, it can keep going up, but I think Ukraine's going to go down in the next couple of weeks. And then I think until then, yeah. So, all right, guys, it is a privilege and honor. We're going to go ahead and end the live so other people can watch. It'll be shorter for them. God bless you. We're going to go ahead, and I'm going to continue to keep commenting down. I'm going to answer it on my phone if I have time. And I will go ahead and answer it tomorrow if I can't do it today. It is a privilege and honor. You guys mean the world to me. I always want to give you guys unbiased information. You have no idea. So God bless each and every one of you. Yeah, God bless.